Hey, guy, count to 10. 1, 2, 3. Oh, just give it 1 second. Wait 1 minute. All right, get this ready. Get that. All right, here we go. Hey guys, welcome to Swing Trade Monday session. I have a few things to show you guys, a few potential setups. There's one setup I took earlier today that I really like. That's HYG, the high yield corporate bond ETF. Actually, I'll start with that one. Pretty excited about this one. Let's go to the splice. Let's jump right into this. So this is the Monday splice for HYG. And basically what you need to know about this ETF that it basically correlates with the market. The market's doing well, this is going to do well too. So that's all you need to know about this ETF. When the market's down big, this thing usually follows. This ETF holds like junk debt. So high yield stuff. So look at the wave 1 daily here on Monday splice. We're at L5 here under pivot. With this option analyzer, this L5 is at 4% odds with 500 days loaded. So much of an outlier already. If you're going to bet on for the lows, it's going to be under 4%, which I'm playing the opposite. It seems pretty obvious that this thing's going to revise higher. It's under the 10% band. Even if I load 1,000 days, let's check this out. I mean, it's been lower before, a few times. Been on some outlier runs to the downside. The overall market's starting to pick up again. I think there's not much news this week. I think I've seen many signs that we might have a rebound week the coming days. So this would follow. Right here, we're at 2% odds, which is even lower than that 4% with 500 days. So with only one occurrence. So anytime you see something like this, it's pretty obvious we're going to see a reversion soon. So that's one thing I like. So I entered today. I entered the April 17th 79 strike call for about 72 cents. This thing was actually up quite a bit today when after market open. And it came down a little bit. I followed the market. And this contract was at 95 cents. It came down to 72 cents and bought it. And I think it's around 80 somewhere, I think, right now. But what's more important is I'm forecasting this HYG to go to about $80, if not tomorrow, the following days. So very soon here for this week. So that's one trade. I don't think it's too late to enter this either. I can go back to the Wave 7 daily and show you this. Let's take these off. So we've been in a compression cycle for a fair amount of time. And we're just now getting back above the vector here. Standard deviations went from red to green, so that's good. So we have price over vector, that's 1. 2, standard deviations green again. And 3, this L16 is pretty low. Look at this big outlier run lower. 7% odds. So we're seeing the signs that this is ready for reversion higher. The 80% band on 79.61. Yeah, I'm thinking at least 80 tomorrow or the following day. As long as the overall market doesn't get any more volatile, as long as things can remain calm and go higher, this will follow. This ETF usually does, like I said. So yeah, up to the 8% band again. We know it's under, was it 4% odds? No, for this one, 7%. But we went down to the 2% band there, but under 7% odds to break under this L16. So again, my entry is there today. Near where price is now. Plus arrow on. Okay. I'll mark this out for you guys. I'll take a picture. So this is least probable. Excuse me. So new lows, again, is the least probable. What's most probable for tomorrow or the following day is this area here. Okay. And I did enter today, like I said, but I still don't think it's too late to enter this. I'll show you some more waves on why that is. Let me take a picture of this right here real quick. And if you haven't seen the options chain of HYG, the premiums are really, really cheap. Usually under $1 on the money. Like I said, the premiums I got was 72 cents, or it'll be $72 premium. So very cheap. And fun fact, this ETF has the most open interest in the entire market, besides indices. Yeah, what strike? So the April 17th, I think I took the 79 strike. Played it a little conservative. I have a lot of money on margin tied up in bond ETFs, so I'm being really careful with my options trading right now, as I should. So I'll type it in here too. People don't hear that right now. April 17th, 79 strike. HYG. Right there. Yeah, check it out. You guys can check out that strike. Let me know what you think about that. Like I said, very cheap premiums in this ETF. It has the most open interest in the entire market. But again, let me keep going on some other waves here. Let me delete this. I'm just getting over getting sick. Bear with me. All right, delete these lines. So on the wave 3 here, there was the M assigned 3 days ago, but we're back in green standard deviation. So that's good. Let me clean this up, make this visibly better. All right. If this cursor load, I want to zoom in a little bit. All right, so again, price is above vector, ended above vector today. And it went down to the average percent below pivot. So we know a break below this area here is an outlier move. So down here to this open state, or I guess imprint bands there, it's possible to hit, right? Potential for that, but it's least probable. What's most probable is somewhere in here to be 80% band. I'll go back to that splice in a minute for those who are just joining. The splice is the most important thing of this trade. All right, 80% band right there, 79.5. But this ETF does not move that much at all, really. I mean, a 1% day is a pretty big day. 1% for this ETF is like 3-4% for SPY or QQ. So 1% day is pretty big for this ETF. Some more days. Look at the options analyzer here. So really at L1, it can definitely flip back to high of 1. 56% odds of L2 limit occurrences. So yeah, it's possible, but we're already near the average percent below pivot. And with that splice I showed, okay, this is different. When you add more days, this average percent changes. So yeah, there's room for it to go lower, right? But let's go back to our splice. I'm only going to show the shorter waves. I'm not going to go to higher time frames because this is a short-term trade. Let me fix this real quick. So again, this is the Monday splice. We're down to 2% band. We're at L5. And this L5 is only, should be about 4% odds. 11%. Let's add more days. 500. Yeah, 4%. With 500 days added, this Monday splice. Only 4% odds of one occurrence of this current low. P or C? Are you asking put or call? This would be a call. Call for HYG. Now, if it continues to show, strength, if it shows more strength than I first speculated on, then yeah, I could hold it a little longer. That's why I picked a date that's a little further out too. Excuse me. So I can also look at some other splices too, I suppose. There's, Monday, Tuesday. Let's see what that shows. Let's take those off. I think we're at L1 here. It looks like. Let me zoom in. Yeah, L1 down to the average move, average percent below pivot. Can I make it L2? Sure. Possible. 5 occurrences, 41% odds. I think it flips back to H1. We wick down to 20% band. So, and with these splices, keep in mind it's really common for the L1 to flip to high 1, the high 1 flip to L1. It happens all the time. That's just how this goes. So that's what I'm seeing there for HYG. All right. Now back up to this is Bank of America. Wave 1 daily. This stock was up about 0.75% today. So 0.75%. Let's go to wave 3. I actually found this over the weekend. I found this over a weekend when this was below pivot and K was just assigned. And now today I made it H1. But I'm looking at this one to see if the highs could continue. This stock's been compressing. If I pull up the linear side, it's been compressing for quite a bit. So there's a lot of room for further expansion is what I'm getting at. And I'll show that with some other waves. I've not pulled out a splice of this one yet, but I will do that. I want to look at the wave 7. And again, I'm not going to go to any higher waves. Let's keep it short term. There's so many variables in today's market. These are going to be short term trades, so day over day or, within a week. Excuse me. What could happen from here? We're at a high 1, right? What could happen from here is I see this happen all the time. Price comes down to this vector for support, and then we can expand higher. There'll be a 50% band somewhere in there, or to the average move. Then we got some open states that are at 51.37. But we know K was just assigned. I think it's today. Let me double check. Today, yep. K assigned. Leave the golden area. So as long as that stays looking like that, green, and leaves golden area, you can expect further expansion above pivot. Right there, up to the 50% band. So that's what I'm looking for there. I believe from what I'm seeing, this is going to continue expanding, but I'd like to see if price would come down here to this vector for support or not. And sometimes too, there's unexpected weakness. It can compress a little bit more under pivot, make it L1 or R2, and then go higher. I know a lot of stocks that just recently did that. So let's look at this real quick. Excuse me. Okay. Yeah, so we're at high of 1. 86% odds of high of 2, though. 3 occurrences. And then 3 for high of 3, 76%. That drops down. So again, I like to see if that comes down, hits support there. If I go back in time, let's see if I can find an example of that after a high of 1. So let's move this here. Go back in time. look at this. So let's go back a little bit. So high of 2. So this was a high of 1, high of 2, then compression. Trying to find what I was talking about. Maybe not. Maybe not in this many days with wave 7, but that's okay. But what I'm trying to get at is, again, price likes to come down find some support real quick and then go higher. Like I drew there. It can happen. So now let's look at a splice of this. Bank of America. Let's get Monday splice. And I can do Monday, Tuesday too. Let me delete these lines. So high of 1 on this one too. So can this continue is the question. Make sure these bands are right. Sometimes you gotta reload them. All right. Right under the 80% band of 48.93. The average move takes us up to here. It's about 50.5. I always put 500 days on. Let's see. High of 1. And then 5 occurrences of H2, 60% odds. I want to look at Monday's Tuesday splice next. But we could definitely make this average move. Let's go to this. All right. Here's a Monday, Tuesday. This looks like a high of 2. Yeah, high of 2. Let's add a little bit more days. Let's see what we got here. So gets cut about in half there. Yep. 20% odds from 56% odds. We're at high of 2. High of 3, only 5 occurrences there. So it's really dropping off there. 14 occurrences to 5. So this may make the L1. They could, right? Let me go back to the daily now. Get some other stuff. Let's go look at wave 10. Zoom in on this. So it appears we've had a long compression cycle here again, like the wave 7. And we're above vector. And I'd like to see this standard deviation turn green. So 1, price above vector, so that's good. 2, this would need to turn green. The K would help us get the squeeze higher. And then 3, L25, let's see the odds of this. 9% odds, right? So, and beyond that goes to 7%, and then all the way down to 2% for L28. That being said, I'm not betting on further lows. Looking at this, let's put the bands on up to 48.89, 80% band. I'd like to see price get there, potentially in the following days. Let me draw this out. And a lot of times I've seen price go kind of sideways right where we're at now. It could happen, like right here, said sideways consolidation. We've been on a long compression cycle here. And a lot of times when we have a compression cycle like this, it's not uncommon for price to consolidate first, this, and then expand higher. So it might fight with the vector a little bit. There's potential for that. All right. Let me delete this. But again, upside for Bank of America. That's what I'm seeing here. Starting to see clues of it. This is obviously the least probable. This is the most probable. And that's basically it for this one. I'll go to GM real quick. Oh, so actually I drew this over the weekend, like the other one, before there was high of 1. Obviously, high of 1 occurred today. I drew this over the weekend. I saw compression, I saw consolidation, and then I knew there was going to be expansion, either way. And upside was most probable. Excuse me. And that's what happened. Up to the 8% man at 76. I believe this is like a L, 20 something or 16 with about under 5% odds. And a lot of times when I see if it's under 5% odds, it's really going to reverse higher shortly. K was assigned, green standardization. Let's see if this one continues or not. Further to the upside. Let's go to wave 10, see if there's a high of 1 yet. Okay, there is. So what's next would be the 50% band area, 78.94. Let's see that happen next. And then here in the wave 20, we're fighting to reclaim vector again. And then we get the 80% band at 80.40 level. And that was about it for GM. And then FedEx, lastly, I'm going to show this real quick. Excuse me. All right. I'm going to add more days on this, actually. Hey, good evening. Thanks for joining. TNT, I'm showing FedEx, the one you've been watching closely. So starting with wave 50, we're at 174 high, right? With 4% odds. Are you going to bet on further highs beyond 174, which would be under 4% odds? No, I would not think so. It's time for reversion. To be much of a super outlier to beat that 174. So yeah, we did it go up a little after earnings. They came back. I really think it's starting to lose its steam here in the following days. I'm looking for a short entry in this one. And I want to play for L1 and potentially even further lower. Let's say L1 brings us around here. I like to hold it to down here to the average percent below pivot. Because it takes a lot to break below this, obviously. Like I said before, breaking below this average percent indicates an outlier. So I don't want to speculate further downside from here because it'd be an outlier. I'm fine with taking profit there if it gets there. Now let me look at oh yeah, real quickly, this standard deviation's been going sideways for a while. Just goes to show that price has really lost steam. Let's go to wave 100 now. You fix this. Take this stuff off my chart. Now I'm thinking probably April 17th would be the date I select on this one. Monthly contract. Let me fix this. Okay. So, what I first noticed here is that upon first test, it was average percent above pivot. We met resistance. We fell quite a bit. Now we're going back up. And I believe price is going to do the same thing if it even gets there. Stall out, and then make an L1 from there. Like I said about down here, vice versa for the upside, it's going to take something really positive for further highs because it'd be an outlier move. Coming to wave 200 now. Same thing. Let's look at the option analyzer here. That's kind of wonky, but the main thing here is it's going to take a real big positive catalyst, break above this average percent above pivot. Great short entry be, around 392, maybe 390, and then play for the L1. But again, let's go to wave 50. This 174 high is not going to persist. It's not going to make any more highs. Very low probability. Again, 4%. So let's see L1 on this one. Let's see. Let's go to a short time frame. Let's see what's going on in the short term real quick. Looks like it's fighting for a short term. Oh, 1 second, my screen's frozen. There we go. Green stimulation left the golden area, right? Above vector. And it's going for the high of 1 now. Let me read the list real quick. Oh, all right. Let's go to option analyzer. We had L13, 9% odds. So perhaps it's due for some short-term upside, right? Something like that. And then maybe from there, we go lower, maybe the imprint band's there, or even lower there. That's a possibility there. Wave 3, standard deviation's pretty elevated there. It's over 1.0. We had a high of 2. It drops down from 4 occurrences to 3 occurrences, 46% odds, high of 3. Now let's look at one more thing for FedEx, and that's going to be a splice. Let's start with the Monday splice. So we're only at a high of 1. Average move lines up with the average percent. Would take us to 390. If you remember what I said a minute ago on the wave 200, the average percent above pivot was 390. So I think I just found my entry here for puts because those numbers line up. So I'd like to see price get there to 390. And I'd like to enter puts there. And know it's going to be an outlier if it breaks above this average percent on this splice. But if we go back to wave 200, like I said, it's going to take a lot. It's going to take a positive catalyst for price to really run above that average percent above pivot on the wave 200 with 2,000 days loaded. So just like that, we'll always look for numbers that line up on different waves and aggregations, to help you for entry, to help you for exits, all that. I'm thinking 390 is a good entry level. Put 500 days on this. I mean, it has somewhat of a history. Well, not much. I'm breaking above this average percent. There was this big outlier move. About 500 days loaded. There's only 1, 2, 3, 4, 5, 6 times where we really got above this average percent. Let's go to Monday, Tuesday. Okay. So this one, we have a high of 2. And it didn't quite perform the average move. Put the percent bands on. Average move lines up to 50%. We didn't quite get there. Let's look at the option analyzer. Okay. Big cliff from there from 6 occurrences to 2. And go from 75% odds down to 38% for a high of 3. So diminishing odds of further highs from high of 2. So could we do for L1 there? Down to 8% band of 352.95. Go back here. So again, let's go to, I think it's the wave 200. Yeah, 390 is where this average percent above pivot is. So the golden area for put entry, like the great spot for entry, would be there theoretically, because like I said, if we break above this level, we're in an outlier run, and that'd be your stop loss area, because if we break above this area, it's going to continue being an outlier. But what should happen is the L1 from there. So here, ideal entry around 390, and then you absolutely need to stop yourself out if we get above 390 and we continue having strength for further upside. I would not like being that, but I'm not seeing that. Be much of an outlier. What's most probable is the L1 soon here. Go back to wave 50. Okay. Let's see, where's 390 at? So there's an open state that was created, not too long ago. 392.86. It could get back there. A lot of times I've seen price kind of make that double top looking thing and then go lower. There's potential for that. But I'm really not seeing any higher highs than this 174. Like I said, super outlier because of this here. 4% odds. 4% odds of this occurring at all, where we're at right now. So it's gonna be under 4% for any further highs. So we're due for reversion. So, and then again, I'm gonna go back to HYG. I think I'm gonna wrap this up. I have a pretty bad cough. I don't know if I can talk for hours today, but I want to get on, at least show you guys a few trades, or a few potential trades in the one trade I'm taking that I'm pretty confident on, this HYG. Let's go to Monday splice I really like. Again, let's go to 500 days. And if you don't know already, if you're trying to swing trade day over day or just within the week, the splices are amazing to use. So again, price right here at L5, right under this 10% band. I'm speculating on seeing $80, by tomorrow or the following day. Or right below it, we have 80% band at 79.88. So around the 80 area. That's what I'm seeing. Let me go to option analyzer. 4% odds of this current low of L5. So there's nothing even listed for further odds or further lows. So yeah, it's gonna be under 4% for any further lows. So pretty obvious statistically that this can be a reversion higher. And then if we go to the wave 3 or the wave 7 daily, which looks good. This is what I do. I look at multiple things. Wave 7 daily, and then the splice, multiple other things. Look at it all and put it together to get a better picture of things. Again here, 7% odds of L16, which we're at. So it's going to be other 7% odds for any further lows. So much of an outlier for it to go any lower. And standard deviation's green. Look to see that continue green. And then 80% band at 79.55. And then I'm going to go to wave 10. For those that are not, since I'm already in this, I don't think it's too late to enter this tomorrow. Wave 10 will lag to wave 7. Excuse me. This can definitely last longer than just the 80% band. It's not going to just reverse after hitting an 80% band. You can see further highs beyond that, of course. So it's been compressing for quite a bit. Let's look at the linear real quick. Look at this compression lower. So gets to 80 tomorrow. Really, it's just a start of expansion cycle higher. That's how I view it. So yeah, I'm pretty confident in this one. Out of all these, I'm sticking with HYG. Again, the premiums are really cheap. I plan to hold this for a few days. So, and like I said, I don't want to hold it too long. I did pick out April 17th, a little further than I need to, but I'm playing conservative right now. Again, there's so many variables in this market, so many things can happen, so many low probability events, the macro side of things. I want this to be a short-term trade. So yeah, I'd like to see $80 by tomorrow, the following days. That's about it. Like I said, I've backed off. I've been getting over being sick, but I'm gonna end speaking here. But I'll be around the chat if you guys want to talk about some other things. But thank you for joining in this Swing Monday. Thanks, guys.